Bloomberg Audio Studios. Podcasts, radio, news. You're listening to the Bloomberg Balance of Power podcast. Catch us live weekdays at noon and 5 p.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
Instant reaction to the post on True Social we just got from President Trump. It's kind of a first it's sour, then it's sweet scenario. I'm actually going to lead with the sweet part at the back end of this post, Joe, because that's what's driving markets. The president suggesting, based on the fact that more than 75 countries have called representatives of this administration to discuss and negotiate a solution to matters of trade, he says countries that have not retaliated in any way, shape, or form against the United States, he is authorizing a 90-day pause on the tariffs and a substantially lowered reciprocal tariff during this period, he says, of 10%, also effective immediately. After he led this post by saying effective immediately, he was raising the tariff on China, which has retaliated, to 125%, but clearly risk assets and others are seizing more on the 90-day pause for everyone else ex-China.
Guess he read Bill Ackman's tweet.
Yeah. This is exactly what he suggested.
Based on the lack of respect, kind of interesting. We've got a red headline now in the terminal. This is all happening before our eyes here on Balance of Power, which is something that we're getting used to these days. 90-day tariff pause on non-retaliating countries. Remembering Scott Bessent warned them not to retaliate, suggesting their behavior might be rewarded. And here we are today, just hours after retaliatory tariffs went into effect.
We're now up nearly 7 percentage points on the NASDAQ 100 as a result of this. Just goes to show you how eagerly markets were waiting for anything they perceive as positive news on tariffs. True. Clearly, this pause being read that way.
And answers the question that this market could, in fact, rally after being so technically broken. Clearly a market hungry for news. And our political panel is at the ready here. Bloomberg Politics contributors Rick Davis and Jeanne Zaino are with us. She is, of course, Democratic analyst, senior democracy fellow with the Center for the Study of the Presidency and Congress. Rick, partner at Stone Court Capital. President Trump said, Jeanne, it's a good time to buy right now. Is he right?
Well, yeah, I think this is the first sign we've gotten in the last week that the president may be listening to the markets and that wiser and cooler heads may be prevailing over his decisions. And so I agree, the 90-day pause, very, very welcome news for everyone. But I do think this raises other questions. If this was all about negotiating, then is he still interested in reshoring? If this was about raising revenue, it can't be a negotiating tool. And so what this was all about, this uncertainty and all of this destruction, is a big looming question. And I think his supporters have the right to ask that, particularly those folks in the UAW who, against a lot of odds, have supported him throughout this, last week as he's raised these tariffs around the world and talked about reshoring and permanent tariffs and never giving up.
Well, certainly buyers are not giving up right now. They are having a grand old time, it seems. We are approaching an 8%, now crossed at 8% gain on the day for the NASDAQ 100. That would be the biggest single-day price move going back to the depths of the COVID pandemic in March of 2020. The S&P 500 right now up 6.5%. Take a single stock like Apple, it's up the better part of 12 percentage points. NVIDIA around there as well. Nike, some of these countries we know were highly vulnerable in this tariff scenario are rallying in a big way. Nike is up the better part of 8% too. And Rick, all of this coming after just hours ago, the President Trump told the public it's a good time to buy. Did the president just decidedly make a choice to help out financial markets here?
It's hard to tell, obviously, the trade news is positive, but everybody's been watching all day for this Treasury benchmark sale, and $39 billion went on the market, and it was a very well received auction. So it could be a combination of all these things. It could be any one of these things driving the outcome. What I find fascinating is the fact that Donald Trump's kind of predicting people, buying at the, dip and then actually making news within the trading day to affect that. I mean, we're in uncharted territory here when it comes to market manipulation. And I'm not suggesting there's anything of malfeasance involved in this, but you certainly have markets reacting both on the upside and on the downside of every word that is uttered out of Donald Trump's mouth, specifically to tariff policy. And this is big news to ratchet up your tariff war with the biggest trading partner and other largest economy in the world, China, and at the same time giving relief to those people who aren't arguing or aren't retaliating. And we don't have a list of who they are. We assume that it's within that core group of countries that he's already raised tariffs with, and will now delay their implementation, at least on the reciprocal side, for the next 90 days. But to think that this is going to add any stability to the markets, I would be shocked and surprised.
It's pretty wild here. The S&P 500 now up 7.3%. The NASDAQ is up by almost 9%, Jeanne. Tesla, by the way, rising 11%. It's back above $247 here in heavy volume, remembering that Howard Lutnick suggested that people buy the shares. He said a lot more than that, actually, at the time. This is when the stock was at about $235. He said to Fox, $235.86. Buy the stock. It'll never be this cheap again. Donald Trump, this is a great time to buy. Rick Davis just said it out loud. Did Democrats start accusing this White House or calling for investigations into market manipulation?
Oh, I think they absolutely are going to do that. I think that we will be hearing about that. The reality is that we have a president who has just, with the sort of stroke of a pen, but it's not even that. It is just going on Truth Social, can move this much of the market. And you bet that Democrats are going to be wanting to ask questions. The problem is investigation is hard in Congress when you are in the minority. So that'll be trouble for them. But I do think that the president is hearing from these folks who have been hurt badly. And, you've mentioned Elon Musk. You've mentioned a few of these people. Bill Ackman, Dave Portnoy is a big voice, and he has been saying he would consider even voting Democratic if this continued. Ken Langone. So a lot of people very close to Donald Trump who've lost a lot of money. So I think we are certainly going to hear Democrats call for investigations.
All right, Jeanne, Sheehan, Zaino, and Rick Davis, our political panel, Bloomberg Politics contributors, the both of them. Thank you so much for being with us as we contend with this breaking news from President Trump. Yes, maybe bad news for China, as that tariff is immediately going up to 125%, according to the president. But for those who have chosen not to retaliate against the U.S. measures, a 90-day pause will also be immediately implemented, and it has had an immediate impact on financial markets off of the dramatic highs of the session. But we are still talking about some very big moves here, Joe. 7.5% rally on the NASDAQ 100, more than 6% on the S&P, and some of the individual movers incredibly remarkable as well. Apple up double digits, Nvidia the same.
Remarkable strength in this rally here, and this is only a couple of minutes old. You wonder how much longer we can keep this kind of momentum in a market that has been so badly beaten down. Remarkable in real time as we watch this unfold right now live on Bloomberg.
And our colleague Scarlet is watching it unfold with the rest of us as she prepares to get us counted down to the closing bell later. It's a very different story, Scarlet, than what we were dealing with just a few minutes ago.
Yeah, we were wondering whether the stock market was going to extend its declines, and it looked like we were bouncing around all morning. But this was kind of the signal that everyone was waiting for. They were waiting for President Trump to back off of his tariffs. He did that for the countries that are negotiating, and this is something that the administration has been very forthright on. Positing all the different countries that have been coming up and making phone calls and trying to reach out to speak with the administration about some kind of negotiations, even though it's not clear what exactly would move the Trump administration to remove or mitigate some of those tariffs. What's notable here is President Trump's comments about, encouraging people to buy the stock market. I wonder to what extent he's trying to call the market bottom in the similar way that President Obama did back in March of 2009. Obama spoke on March 3rd, and just over a week later, the market hit its low point, and from that point on, moved higher.
We're talking about a social media post here, Scarlet. We don't have an actual piece of paper from the White House. We don't even know exactly what countries qualify as non-retaliatory.
Yeah, good point.
We do have to acknowledge the fluidity here in this market and the stakes after such severe losses? Why should investors have confidence in anything to do with tariffs right now?
I don't know that it's confidence to do with tariffs, but for now, this is a bit of relief. This is a respite from the constant selling the bad news. On Wall Street, the projections that the U.S. economy would tip into recession have been steadily growing. A lot of people, including Larry Fink of BlackRock, were saying that many company executives were telling him that the economy was already in recession. So it kind of became this default scenario that we were in recession, and it would be only a matter of time before the data backed that up. So this is a break in that bad news story. So far this week, we've seen the bad news really turn to the bond market. Last week was all about the stock market kind of in collapse mode, and it's been a lot more fluid, volatile this week, but the bond market has really taken it on the chin this week. And there's a lot of question marks over whether this is fundamentally driven or technically driven.
I just want to point out for those who have been following the commentary of Bill Ackman in regard to tariffs, who, as Joe reminded us just moments ago, did push for the 90-day pause to begin with, which is what Donald Trump seems to have decided here. He posts simple message on X now, just thank you. Nothing else. So I guess he likes what he's seeing here, just as risk asset investors do. But Scarlet, it's remarkable that we get this news today after we already have learned today about instances of multiple companies making decisions or having to issue guidance that is unclear or pull that guidance because of these tariffs. Delta, of course, not willing to stand by a forecast. We had Bloomberg reporting of Amazon actually pulling orders of inventories on goods coming from China. Already, this is affecting corporate behavior, even if the president has now decided that there will be a pause, at least in some instances.
Yeah, absolutely. It's difficult for any company to go out there and say very much about how they anticipate the year to shape up when they don't know what's going to happen. At the end of the day, nobody knows anything. And to give firm numbers is just inviting scrutiny and inviting people to knock your stock down when it won't come to fruition. And I think that's pretty much the case. We were speaking with a pharmaceutical analyst who was talking about how this promise by President Trump to impose tariffs on the pharmaceutical industry is, of course, meant to encourage these companies to move their manufacturing back to the U.S. But because their supply chain is so complex and it would take years for them to do so, they're not ready to commit to anything else. They already have a lot of their manufacturing, their high-value manufacturing in the United States, but they are able to bring in a lot of their products from overseas, into their warehouses and work off of their inventory. They probably have a 2-year waiting period where they don't need to do anything and can see how this all shakes out.
Bloomberg's Scarlet Fu in the throes of the rally. Right now, the S&P 500 up 390 points, almost 8%. Kailey, the NASDAQ is up by more than 9%. A powerful move here. 1,455-point rally as the Commerce Secretary takes to Twitter. Scott Bessent and he writes, retweeting or showing a screen grab of President Trump's post on Truth Social. Sat with the president, he says, while he wrote one of the most extraordinary truth posts of his presidency. The world is ready to work with President Trump to fix global trade, he says, and China has chosen the opposite direction.
You're listening to the Bloomberg Balance of Power podcast. Catch us live weekdays at noon and 5 p.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
The press secretary and the Treasury Secretary in the driveway outside the West Wing, sparring with reporters there, answering questions after Donald Trump made clear that the 90-day review period would begin for countries not retaliating to reciprocal tariffs placed by the United States. In fact, took effect at 12:01 a.m. There's a big exception here, and that's China, now facing a 125% tariff. Markets taking off on news of this review. Scott Bessent just now saying we have a 10% temporary floor, and something we've heard him say before, Kailey, the initial Trump tariffs are the maximum level. The idea would be engage with this White House. We start to pull them back. Interesting to hear him suggest the president goaded China into this position.
Suggesting this was his strategy all along. And interesting to hear as well, the press secretary telling the media assembled to speak with these two that they misunderstood or were missing Trump's art of the deal, despite characterizations initially of these tariffs being non-negotiable and not a negotiating tactic. Maybe it all was for the deal at the end of the day.
You wonder if Peter Navarro read that book, because he's been projecting $6 trillion in revenue over the next decade from these tariffs that are, in some cases, maybe never going to take effect.
Well, certainly the market is hoping maybe that's the case. At the very least, they're satisfied. Investors seem to be with this 90-day pause. Again, the NASDAQ 100 nearly 9% higher on the day. It's a 7% gain as we speak for the S&P 500. And it's on that note we turn to our colleague, Joe Weisenthal, who, of course, is the host of the Odd Lots podcast. Joe, is this just proof that investors were waiting with bated breath for the opportunity to buy the dip?
I mean, what I'll say is I think it's evidence that it's a huge relief that there's at least some impulse to take an off-ramp here. And last night when we saw Treasury yields blowing out and we saw the 10-year hit 4.5%, these are dynamics that happen when there is like extreme stress, illiquidity, run dynamics happening in financial markets. That can't persist very long. When you see moves like what we saw last night, I know the Secretary Bessent there said this was not a response to what we were seeing in market volatility, that it was all, art of the deal, et cetera. Nonetheless, clearly the markets were under extreme distress. And I'll just say a couple other things. The market is, I'm looking at NASDAQ 100 futures. They're still down 5.5%. The China tariffs are still huge. That's going to be, a huge effect on lots of American companies. There's the 10% sort of floor tariffs. Those are still in place. So, look, I think it's a big relief that obviously some of this has been delayed, but I think there's still quite a bit to work through here at a very minimum before there's some sort of like true all clear. Every major index is still like deeply in the red on the year. S&P is down 9.6% on the year.
Yeah, wow. Joe, it's great to have you with us here as this evolves before our eyes. One of the reporters in the driveway asked a really important question of the Treasury Secretary. Why should investors have confidence that this isn't going to change again in the next 12 hours? These just took effect at 12:01 a.m. Speak to the psychology at this moment on Wall Street.
I mean, I think there's two things. It's like, one is like, yes, we've now seen that these headlines can change all the time. I guess like it seems plausible that, okay, for the next 90 days, you get some sort of respite on the non-China companies. But I think even outside of the stock market, you have to think about actual business investing, hiring, et cetera. And we've seen the business side sentiment surveys absolutely horrendous. We haven't gotten a lot of hard data that really speaks to what was happening economically in the middle of March. Earlier in the week, we heard Larry Fink. He said every CEO that he talks to thinks the recession has already begun. Jamie Dimon talking about recession being the base case. So even with the 90-day pause in the non-China countries, it's worthwhile to think about like what the last several days have done for the business community in terms of saying like, wait, you don't know the rules. Now we don't know what the rules are going to be for like 3 months probably. And so we continue to have this environment where if nothing else, the trading relationship is highly uncertain, which at least in the short term is not conducive to investment. But they would probably argue, it's short-term pain for long-term gain.
Mm-hmm.
Well, it's incredible that these headlines hit in the 1 o'clock hour ahead of the Fed minutes, which are due to come out just a few minutes from now, Joe. I guess whatever news we might have seen in them probably overshadowed by these developments, keeping in mind it's backward-looking minutes and they didn't know what the tariff levels were going to be in the first place, let alone that they would be pulled back. But it speaks to the kind of uncertainty we keep hearing Chairman Powell talk about as to why the Fed isn't enticed to move in any direction because so much is so unclear.
There's so much that's so unclear. Short-term market-based inflation measures going up, long-term ones going down. So much uncertainty, soft data going down, hard data still going up. And the other thing is, speaking of uncertainty, look, we all heard the White House's presentation there about the art of the deal, and China has now been goaded to being revealed as the bad actor, et cetera. And okay, that's a fine story. However, last week at the Rose Garden, those reciprocal tariffs were very specifically presented in such a manner that every country that runs a bilateral trade surplus with us, which is almost every country, was per se engaged in bad acting. That that's the whole premise of reciprocity. And so, it's clearly not presented that China was anything particularly special last week. The story has evolved. The story has evolved whether it's negotiations versus non-negotiations, et cetera. So, again, I'm not surprised that there is this sort of massive sigh of relief. We actually knew that there would be a massive sigh of relief on Monday when we got the fake headline about a 90-day pause that So we knew the market was looking for something like this. But I think there's still a lot of question marks about the sort of what any negotiations would look like and what kind of economic degradation we see in the meantime.
I'd love to hear the Trump interview on odd lots, I have to say. We've
one
only got a
day,
minute left.
one
And we
day,
want to
anytime.
clear out in time for Fed Minutes, Joe. But we heard the president said last night, this is a great time to buy. Said that this morning, in fact. Everything is going to work out well. Is there a world in which you're allowing him to eventually be correct?
Yeah, of course. No, I hope so. There's a few things. It's like one is obviously you hope to have like a prosperous global economy, which would be fantastic. Even prior to the Trump administration, there's been a lot of anxiety about the nature of both the U.S. and really everyone's reliance on China for domestic manufactured goods. Obviously, the Biden administration tried to effect change on that respect, at least with respect to sort of like cutting edge tech, like semiconductors, et cetera. There is a lot that could be better about the world. Again, when you look at how much the markets sell off, that's really indicative of like investors are much more pessimistic than they were about the state of the world than they were at the beginning of the year. But look, I like I said, I understand, and I think it makes total sense why there's this massive sigh of relief happening in markets right now.
Yeah. What a great chance to spend some time with Joe Weisenthal. Next Odd Lots ought to be a riot. It's great to see you.
Thank you.
At World Headquarters in New York. Thanks for listening to the Balance of Power podcast. Make sure to subscribe if you haven't already at Apple, Spotify, or wherever you get your podcasts. And you can find us live every weekday from Washington, D.C. at noontime Eastern at Bloomberg.com.